evening and welcome to the Australian Stock Market Show. We do hope you've had a great week and are staying safe. Benjamin Disraeli once said, to be conscious that you are ignorant is a great step into knowledge. I think that this is in line with being open to the fact that you don't know what you don't know. And so be open to learning. That's really the message. Tonight we'll take your education to a new level as we get into some interesting topics and indeed stocks. As always, our aim is to educate and inform you, so as we answer your questions and bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is trading for income, 5 tips to make a living from trading. Hello, I'm Janine Cox, your host tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. G'day.
How you doing?
Good, and yourself?
Yeah, I'm fantastic.
Well, that's good to hear. I'm glad to hear that.
Springtime. I love springtime. It's beautiful, isn't it?
It is lovely.
I don't mind doing that. That's a good quote.
Really?
Yeah, that was a good quote. Most people don't even know they're even ignorant.
Okay.
So they're ignorant of being ignorant.
Why'd you shake your head when you do that?
Why did I shake my head? I don't
Is
know.
that with
Maybe
passion?
you're a psychology person trying to read me. Going, where's my crystal ball? I'm just saying, a lot of people don't even know they're even ignorant to what it is. And I think you only have to look at a lot of questions that people ask us, and you go, yep.
Actually, I want to really just share a thought for single mums out there at the moment dealing with the lockdown and COVID.
Yeah.
I really feel for people who are, stuck at home and potentially are, maybe struggling. I just hope that, that they, get some help, at some stage, and that the lockdown's relaxed, at least in areas where it's not high risk.
We have 3 single mums that work for us. So, and I came up from a single mum family, so I understand what it's like. So I agree with you. It's tough. So if you know somebody who's a single mum, just pick up the phone and say hello. I think that's a great idea. And just say, what's the best thing that's happened to you today? We got that from Amanda Gore.
We did, didn't we?
We did that. So Janine and I interviewed Amanda Gore, who's from Queensland. She's a lovely lady, so check her out. But Janine, before we get into our next segment, we do need to take some time to say to people, we are going to take some live calls on tonight's show. So if you want to chat personally to Janine and I and ask us a question live, then this is your opportunity to pick up the phone and call us now. The number you need to call is 03 for Melbourne, 92909988. That's 0392909988. Now, I know I'm really keen to chat to you and chat to anybody who's watching us here, so do pick up your phone and get dialing now.
Shall I call you, have a chat?
Dale, have a chat. That's me.
So come on, everyone. We would love to speak with you while we wait for you to call. It is the first Tuesday in the month, and this means we take a look at the Australian stock market. Yay! So let's get into the charts.
You and your yays.
I added that to the script so I wouldn't get told off.
Okay, right now on your screen, we do have a chart of the All Ordinaries Index. Now, every week they hear me, so it's your turn. Your turn. Go on.
Really?
Go for it. Yep.
Oh, wow.
Grab the mouse. You're in control. Ladies first, all that sort of stuff.
Pressure.
Pip, pip, cheerio. Go for it.
Okay. Look, I'm absolutely loving the fact that the All Ordinaries Index is actually now clearly well ahead of that high in November 2007. However, we have been rising now for a number of months. So we saw this sideways move, which I thought was interesting. And we did think that the market may pull back at that point and have a bit of a breather. And frankly, I would have preferred that it did. Just so that it's set up for a much more, I guess, longer-term rise that we could have had out of this. But I think we're more than likely going to see a peak at some stage, either in the next 2 or 3 months or in early 2022. So, but you're expecting a peak much earlier, aren't you, at this stage?
Well, if you look at it, I did some research yesterday. Well, not yesterday. I did research recently for my interview with Jim Beach. And I talked about the S&P 500 because we always have this whole thing, Red October, beware of October, all the things about crashing in October. And I went, well, what's the go for the last 4 months of the year? Now, on the S&P 500 in the US, September's the most bearish month out of the 4. Okay, and around 60% of the time in the last 10 years, it's been the one that's fallen away. and 40% of the time it's been October. So basically there's a pretty big chance the S&P 500 will make a low in September, October this year based on that. And I went back another 20 years as well and didn't really change. Another 10 years it didn't change that much. And our market's not too dissimilar. We generally have our lows in September, October or November, not always in any other months. We do have a low earlier in the year too. So I'm expecting we go into a low, then we might go, and it might be only a 8% fall or 10 or 12% fall. It might be a big one, and then move up. So we could move up into March next year and then have a bigger fall.
Yep. Okay.
So that's also possible as well. But
I was
now I'm just being careful.
thinking that might happen closer to budget time next year.
Yeah, it could. It could. But we are well overdue for a pullback because we haven't had an 8% or plus pullback since March last year.
Yep.
So we're overdue for a bigger pullback of that sort of magnitude of at least 8 to 12%.
Okay.
And I think the US is probably going to pull back more than that. It'll probably be more like 15 to 18%, I think. I don't think the US's market's going to crash now.
The Australian market has been pulling back. Over time, we've seen a lot of the corrections come back less than the US market.
Yeah, we do. But right now, I mean, our market is slowing. The momentum in our market is definitely slowing. It's showing the signs that it doesn't want to be super bullish because we should have gone bullish in the last couple of weeks, but we haven't. And why not? I mean, we should be, but is the economics around the Australian economy, is that not bullish at the moment? And I think what we're seeing is a lot of uncertainty. Yep. If you're in business, would you be employing somebody right now?
Look, I think people are trying to employ people in certain industries, and they're finding it really hard to get people and to get good people. They're just it's an employee's market at the moment.
So are people scared of finding another job and going out to work, or is it employers not necessarily wanting to spend money and take the chance that they're going to get locked down again and all the things that are going on at the moment? There's no certainty right at the moment. If I was running a restaurant or a cafe or some business where I relied on people walking in the door like a retail shop, I'm not employing anybody.
No, you wouldn't be.
And I'd be scared. And if I was in those areas and I wanted to work back in the area, well, do you change jobs or do you go looking for jobs or do you go and look for some other type of job? Yep. So there's a lot of uncertainty on our market right now.
But we're looking at it holding around this level at the moment, around 7,800 points, which is one of the levels that I had for the market, but also looked at 8,200 and 8,400 points as a potential as well.
Yeah, well, I've been saying the last few weeks I think 8,200 is possible if we do go bullish, but I said we need to wait and see because the market's not
It's going to rely on the
proven.
banks.
Correct.
So we need to watch the banks and what they do and the big miners. Simple.
Yeah, so just watch out at the moment. I think what I'm saying to people is just to be careful before taking lots of buys and being really a little bit more picky in what you're buying and selling. And that's really what it's about, I think.
Okay. Well, that is all from us on the Australian market. Now it is time to get into our first email for the night.
Okay, our first email tonight is from Jazz, who says, "Hi, Dale and Janine. I'd like to thank you guys for doing such a great education show each and every week, providing free education people like us. Can you please have a look on a stock, Oz Minerals, as I purchased this stock at $23.59 and planning to hold for the medium term. At the moment, the stock is showing a little weakness and looking your thoughts on it with upside potential and associated risk. Many thanks, regard, Jazz." Okay.
All right. So we've got the monthly chart obviously on the left-hand side and the weekly chart on the right-hand side, and I think it looks good. Looking at this stock, you could see potentially from the bigger picture perspective that we've got the potential for it to go up to that all-time high. Yep. You know, there's not a lot stopping it right now. It is at a resistance level at the moment, but a push up in the right direction and we could see it take out that recent high. So that's the view that I've got on the stock at the moment.
Okay, so he bought it at $23.59, but we don't know when he bought it because it could have been any time.
That's it. So if I expand up the weekly chart so we can just have a good look at that, it may have been through here or he may have bought it when it came off that bottom. I don't know, but I mean, there was no actual entry rule to buy it in that early phase through here. If he's bought it through here, there's plenty of reasons because it was in a nice uptrend going up.
So if he's bought it more recently, it's too early?
Yeah, so let's just have a look at where that is. So this is approximately, so it actually fell to 15, almost 15% when it fell. So and that line's not exact on 23.59, I haven't anchored it there. So it would have been pretty close to a 15% stop loss there, depending on where his mark was and also the trigger that he used. But looking at it now, it's back above the buy price. So what would you do?
Look, I mean, at the moment, I'm not buying yet because it really hasn't proven that it's stopped falling. But I'd be
just
interested
based on this person's holding this stock, It's
still
back
holding
above
it.
the buy price, you'd still be holding
I'd still be holding it. If I'm already in it, I'm still holding. There's not an issue. Would I be looking to take a new entry right now? No. Do I like it? Yes. Do I think it's got potential? Yes. But I just think it's a little bit early to buy.
Okay.
I'd be waiting for a little bit more
Need
confirmation.
your rules.
Yeah, I need my rules to satisfy, so I think it's a little bit more there. So, but we need someone to give us a call on 92909988. Pick up your phone now and give us a call.
Our next email is from Lanny. Hi, Dale and Janine. Could you please provide your technical analysis on Magnus Energy Technologies? I enjoy and look forward to watching your show every week. As always, thank you for sharing your insights and knowledge. Regards, Lanny. Thank you very much for that email, Lanny. Now, we're looking at Magnus Energy Technologies on the screen there. So it's a highly volatile stock. So that's obviously due to the illiquidity of this share. But the first thing I want to look at, other than the actual shape, because I find that fascinating, the fact that it's just come straight up and almost on the same angle, come back down again. Stocks don't often do that, but that could be a big sign that it's bottoming, a big bottoming pattern there. But if we look at the right-hand side of the chart, have a look at that volume, Dale. So we had spike volume here when was that? That was January 2021. So it's obviously... was that actually on the actual move up? I'm just interested to see if it was the bar before. No, it was actually on the bar of that rise there. So it actually now see how the liquidity can be so impacted. All of a sudden you get these purchases, the stock shoots up. And this can be frustrating too for traders who are trying to trade these types of stocks, waiting for the rules to trigger, and then all of a sudden some money comes in, and there doesn't have to be a lot of money going in there, and it pushes the price up so strongly that it ruins the entry.
Well, there's two factors. There's nothing going into it. It's not really a highly liquid stock, is it?
No.
I think I saw something on YouTube today, and somebody's posted, I think it's the same stock, and they said there were trend lines on it, and I'm not sure whether it's the same person or the same stock. But if it is the same person and the same stock, firstly, don't ask a question on both YouTube and for the show, but there's no trend lines there.
Oh, look, I'm just squinting trying to see where they could have drawn that, but have to have a closer look.
But I think it is. I think it is the same stock, and I don't know whether it's the same person or whether it's two different people or whatever it is, but I think it was the same. Somebody said it's got trend lines and blah, 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 and I went, I can't see that.
No.
And it's not a stock that I'm excited about right now.
I guess the positive thing is it's going up. It's been going up, but more or less over since this first move, this was the big move, January 2021. It's done nothing since then, has it?
Well, it's not. It's going sideways, and this is the thing. And I think a lot of people don't realise the volatility of these stocks. And this is where, and I'm not saying anything about this person, but this is where that quote you talked about at ignorance is people don't know what they don't know. And they think because if we go to the chart and we see, look, this sort of took off and it went up 132% in that 1 week. Hey, that's an awesome stock to trade.
It's going to do it again.
It's going to do it again. And that's what I mean by ignorance. No, it doesn't. It may do that again, but then how do you get out?
Yeah.
And it may do the exact opposite because it does fall really, really heavily as well because, you're looking at the range of this bar from there to there, there's 33% in the 1 week. It fell. So if you'd bought up in here thinking it's going up 132% or bought anywhere on here, you would have been losing money, but then it eventually came all the way down to sort of, down 50% down to these sorts of levels. So here it's really dangerous and people don't realise that. And just because you can buy a stock doesn't mean you can sell it at the right time because most people get that wrong.
Yep. Okay, so if it goes through around 42 cents and it goes up strongly, do you think it's more likely to go up? Keep going?
Yeah, but how far? You're looking at, this is the challenge of these sorts of stocks. Look at it. It's just been in 2008, it's been ranging between 10 cents and $1. Now people go, wow, that's a huge range in price. And it is, but then how do you trade it? How do you have a solid set of repeatable rules? Because a trader is somebody who has a set of rules that they can repeat over and over again. This is going to be a lot more guesswork, in my view.
Yeah,
anyway.
I agree.
Cool. Anyway, we've got a caller on the line. So who have we got on the line now? Hello, are you there?
Hi, yes I am.
Hello, who's that? Who have we got on the line?
We've got Steph here.
Hi, Steph. Welcome to talking to our show, Australian Stock Market Show. What's your question for us today?
My question today is about FMG.
FMG?
A large cap stock. I wanted to understand what's your view in terms of adding it to my share portfolio because last month it was at its all-time high at $26.
Yep.
It's now around $17.90.
Fantastic.
Wanted to understand whether or not it's a good time to buy given the current market conditions of China in the iron ore
Yep.
market. And so, yeah, just wanted to understand your thoughts on it.
Are you looking short, medium, long term for it, or?
Long-term hold beyond 12 months.
Okay.
And then obviously I wanted to diversify my portfolio because I've got small and mid-cap stocks, but not a lot of large-cap stocks. So
Yep.
thought S&G would be a good quality one.
Fantastic. Yeah, we tend to do it the other way. We put the large quality stocks in first to make a solid basis, and then we put the mid cap to lower caps on top of it. So that's what we tend to do. You'll find that if you've read my book, you'll find that. But I think I'll turn it over to Janine now, and she can have a look at FMG because she loves this stock. So thanks, Steph, for calling us.
Hi, Stess, and so awesome to see a lady calling in. Fantastic, good on you, and got your portfolio going, and gee, you're a modern girl. Well done. So look, I'm looking at Fortescue on the screen here. You can see that recently, as Steph rightly said, the stock has actually fallen away quite significantly. So we've seen roughly a 30% fall from its high. Now, the challenge is that it's like catch a falling knife. How do you know when that bottom is? And never think that even though you're looking at this and thinking it's a big quality stock, never think that it cannot fall further, because these stocks definitely can.
They can, yep.
And I could say to you that if you look at the weekly chart now on the right, there were people buying in here thinking, surely, FMG's a great stock. It's cheaper now. I'm going to buy it. It's gone down 20%, and often stocks can rebound after they've fallen that far. We hear people talk about the market falling that far and then it recovers. But look, it's dropped down further. So those people have got stung, basically trying to get in at what they thought was cheap, but the market's just decided it can be cheaper. Now, I'm going to tell you that this stock could actually halve in value. That's the real risk with FMG right now. We could see it go to 50% of what its all-time high was. So I would say it's too early to keep it on your list. The idea is when you see a stock that's fallen away that you know is a good stock from a fundamental perspective, the idea with technical analysis is to time your entry, right? So it's about sitting there laying in wait and waiting for that best opportunity, but it's more about not necessarily best, it's more about your lowest risk time to enter. So you don't want to be getting in there when when there's big money trying to get out, because they may make it fall further. In the current climate, shares are a lot more volatile. So I would say just wait, be patient.
Yeah, I mean, I agree with you. I was looking at it, I think it could halve in price down to around 13.50-ish, sort of that sort of bracket. But if you want to be like Stess and give us a call, it's 92909988. But moving on, we do have a question from Jim, who says, "Hi team, thank you for all your good information. Could you take a look at Bega Cheese, BGA? I have a small position and looking to buy more. Would you consider this company to be a possible takeover target, say for somebody like a Wesfarmers? Regards, Jim." Okay.
Yes, now, great stock, and I really liked the Bega Cheese story. I don't fully understand this business from a fundamental...
Vegemite now, so they've got to be good.
fundamental point of view, but I like their products. However, the chart looks crap. Sorry to put it bluntly, but it just does. So,
Do I need to get a swear jar for you?
I don't think so.
Okay.
Since when have I
Well, you just said the word. I used to have to pay fines for that.
He actually got me on a previous show by just trying to trick me into saying it, didn't you?
But you didn't.
I did. You pulled me up for it. So look, okay, BGA we're looking at here. What can I say? It's got a real risk potential at the moment on the downside, particularly if it actually takes out this recent low. You can see there on the weekly chart that low back in August, I think it is. If it goes below that, then I would just steer clear of it. But I think the stock has potential to recover. We need a few more weeks, on the drawing board to see what it does. So I'd say come back and ask us again in a couple of weeks would be my answer.
Yeah, but I do like the stock. I think it's good, and I think it's great what they're doing. And when they've bought back Vegemite, so Vegemite's now Australian owned, and obviously they've got peanut butter and things like that as well. So,
look, one other thing I could add.
I buy their stuff because I want to support them.
Yeah, one other thing I could add to that is this stock really fitting with the goals of your portfolio? So what criteria have you set up for your portfolio in terms of your stock selection, how you choose stocks, and does this actually fit with that? And considering things like the volatility of the share, does it fit in the overall market and the index, and does that fit with the type of shares that you were looking? If it does, and it does tick all of those boxes, then it's now just about waiting for your rules to trigger before you can get in.
Possible takeover, that was the other part of the question.
Yeah, would Wesfarmers take over this stock? Look, I'm not so sure.
I'm not so sure
I haven't seen. Have you seen Wesfarmers going this way? It's not an area I've seen Wesfarmers moving into. So I'm just not sure about that.
No, I don't think so either at this point in time. But hey, you never know. But right now, it doesn't look like a stock you want to be in at the moment anyway.
Could some other company try to take them over?
Maybe.
You know, I don't know what's happened to the sales of some of these businesses. People are shopping online like crazy, but are they still buying as much cheese and as much of the products that these companies sell? Because remember, a lot of people buy on impulse, so they walk around. That's why they set certain things up in the supermarket so that people will buy more of certain things, and they move things around so that you have to go into different aisles to look.
But maybe Bega might be
much.
looking at other smaller companies in these sorts of areas, other cheese companies and other ones, and maybe looking to bring them into the fold. I don't know.
Who knows?
They may be doing the opposite.
Do your research, that's for sure. Okay, our next email is from Callie. Fantastic, another lady. Hi Dale and Janine, I'm hearing a lot about fintechs and blockchain technology. I'm heavily invested in Novati and they are waiting for Radi banking licence. What's your opinion? Love the show. Thanks, Callie. Great question. Okay, now this is another really quite volatile stock, isn't it? Look how fast it's risen, but also how hard it's pulled back recently. So it's testament to the liquidity that's going on there. But notice how the liquidity changed when COVID hit. So something must have happened around this time. Maybe they started, maybe there was something new that happened at that stage. She's quite excited about the stock, obviously. Maybe that's when there was talk about this whole opportunity. I don't know.
Yeah, but you get that. A lot of stocks, we talk about they run on rumours and those sorts of things, especially stocks when they're more illiquid stocks, and then you get into these flavour of the month type things that they run in chat forums, which is why because like yesterday my report that went out in the my Monday market report was all about the three areas that ASIC seem to be aware of. One is pump and dump. I'm not saying this is a pump and dump stock, but it happens all the time, and what we're seeing is people in chat forums ramping it because blockchain is all this great whiz-bang technology right now, and I love blockchain, but it doesn't mean I need to be investing in it right now.
Yep.
But they could be some of the companies that I might want to invest in, and we've talked a bit about that.
Yeah, I think it's good to look at these charts and say, okay, when were people in the know getting in? And what can I learn from this? And we had a segment on the show, remember, about, it was about those stocks that were ramped, that you brought up the subject. What was it, GameStop?
GameStop.
Yeah, so and we showed this sort of pattern that was unfolding here. See, this is where the real volume came in and they started buying it up that week. And then it took off again. And this is what often happens when these stocks get ramped. It'll go up the first time, it might go up again, but then eventually it'll peter out and then have a significant pullback to where the market actually really values the stock. So that's what we're seeing, I think, now. But look, it needs to get above approximately, I would say around 55 cents, 56 cents, and move up strongly to have any chance of getting back up towards that high, the recent high that we've seen.
I think so too, but it doesn't excite me as a stock right now. So, but hey, it doesn't mean it's not going to go flying through the roof. But again, you need to do your research, don't you? Which is really what we need to do. Cool. All right. So let's move on in the show. I think where are we up to now? I'm not 100% sure. Better go and find my script. And we got the next. So we got a caller. Sorry, we do have a caller. I got confused, Corey. They call it Alzheimer's disease that I had. Who's on the line?
Towards that high that the recent.
Hello, who am I speaking to?
Cam.
Hi, Cam. How you doing, buddy?
Good, how are you?
Fantastic. Thank you for joining the show. You've got a question for Janine and I?
Yes, please.
Fantastic.
Could you please give advice? I want to get the dividends.
Yep.
So should I buy the blue chip stock on before activity day?
Yep.
Or should I wait and buy on activity day, because on that day the stock will fail? And then another question is, if I buy the blue chip on blue chip on activity day, I will get the dividend on. I will get a dividend on after that. and I bought a coal share on 27th of August, and this share when it's good time to sell it.
Okay, so you got sort of a couple of questions there. What's the purpose of getting a dividend? You want the income, do you, or you need the income?
Yes,
Okay.
yes, just the extra income.
Fantastic. Oh, thanks for your question, Cam. We'll get to answering that now.
Right. Well, look, I mean, it's a good one, isn't it? I mean, do you buy a stock? If a stock pays a good dividend, say, do you go and buy the stock before it goes ex-dividend, or do you wait until and you're not worried about the dividend? Is that what he was saying, do you think?
Well, he's saying, do you buy it before, or when do you buy it, or when do you buy the stock?
Yeah.
I mean, I don't buy stock because of a dividend ever.
No way.
Unless it's a good stock and it's going to go up, I just ignore it. Doesn't matter how big the dividend is, because we've talked about dividends before.
Yeah, and the risk.
But if I like the stock, I'll buy it probably a long time, possibly even a long time before ex-dividend date, because you need
It just depends on when your rules trigger.
Yeah,
if
it's
your
just-
rules trigger before a stock goes ex-dividend the week before, then you're going to buy it more than likely. But you're just going to be aware of the fact that when it goes ex-dividend, it's going to pull back. And what you want to observe is how far does it actually pull back? Does it pull back the full amount of the dividend, more, double? That's really going to give you an indication too as to whether the market's favouring the stock or not. But look, I'm with you. I'm not going to be. I guess if someone's really fixed on buying for income, though, should they be looking for dividends? That's the other question.
Yeah, but is your plan to hold the stock then long term? Because if let's say you buy a stock, a $10 stock, and it pays $1 dividend, and it's not going to do that. I'm just using round numbers, and you buy in it before ex-dividend date, it's at $10, and then it drops to $8.50. After.
Yeah, I had this little caption of the cat that's hanging on the branch that I've seen.
And
you've
got $1 of income possibly with franking credits, and now you've got a stock worth $8.50.
You've just lost your capital.
You've just lost your capital, but are you going to hang on to the share at $8.50, or are you going to hang on to it long term? And then it
becomes a long-term trade, does it?
Then it becomes a long-term trade. So what's more? It needs a lot more thinking around that. To me, it's always about buy a stock that's going up first. And that's first and foremost. And if you get a dividend, that's the bonus. It's more about looking at your portfolio management, not looking at the dividend.
So would you trade
first.
stocks for dividend income? Like if you want income, would you trade it for dividends?
I would trade the stock to get my income, which is part of what we're going to talk about later, isn't it?
Great.
Did you want to have a brief chat about Coles now, because he didn't mention that, or you want to ignore him completely?
No, I don't want to ignore him at all.
All right, keep going.
Look, Coles is a really great stock. I think it's done well over the recent months, and we've seen it rise up to challenge that high. So the all-time high for Coles now is in August, okay? So up around 1920 or 1926.
I got all my glasses on
Yeah,
again.
that would help. And then it's fallen, obviously, had a decent fall, and it's been trending all the way back up. This trend looks really nice.
It does.
And we now need to see it just settle down. It may pull back a bit further. We've seen a bit of a reversal in the price. And of course, you've got to accept that when it's getting towards its high, it's going to potentially meet some resistance around there. And then just watch to see what it does now. So I think it's a waiting game now.
Okay, so Cam just wait. I think he said he bought it, didn't he? Cam said he bought it.
I'm not sure if he bought it, but if for anyone who's looking at coal, if you haven't bought it yet, then sit back and wait. If you're already in it, then obviously you've got your rules to manage your downside risk, and that's important.
Long term, I like Coles. I think it's going to be a good stock. Okay, so thanks, Cam. And if you want to be like Cam and our other caller and have a chat with Janine and I, we will be doing that again. But before we get into the topic, as I said, later on in the show, we're going to have another opportunity for you to call in and ask Janine and I a question personally live on the show. So stay tuned for the opportunity, and more importantly, be ready to dial when we tell you to call. Okay, now it's really time to get into our topic, and the topic is trading for income, 5 tips to make a living from trading.
Okay, look, COVID-19 has seen a large influx of people wanting to generate alternative streams of income through trading the stock market. And this has raised a lot of questions for those attempting to make a living trading at home. How would you like to spend an hour a day trading to make the level of income that you desire? If you answered yes, you'd love that. You're about to find out the most important questions you need answers to if you want to trade from home for a living. And we'll share our top 5 tips to prepare you to construct the best portfolio to trade for income from home.
Okay, more and more people are asking questions about this very topic, and one of the most common questions asked is, I would like to replace my income. How much money will I make from trading? Now, a wise man once said, it is the quality of your question that determines the quality of your answer. Now, surely the better question to ask would be, how can I make a lot more money than I am now so that I can replace my income? Now, before we get into more of what you need to know, I did want to share with you a quote from Swiss psychologist Carl Jung, who said, "To ask the right question is already half the solution."
There are lots of questions you should ask if you desire to trade the market for a living. Someone I communicated to this week said he dreams of trading for a living. So how do you turn your dream into a reality? You need to ask questions and get answers. It's not about selecting stocks. An article in Forbes magazine raised 4 points about turning your dreams into a reality, and I thought those could be a good basis to ask you some questions. So let's see how many of you know the answers to these. So let's have a look now, because answering these questions will help prepare you to achieve your goal.
Okay, so what's the first question, Janine?
All right, the first question is actually about, the point in the Forbes article was have a vision. So I turned that into, well, what is my why? So it's about being really clear about what you want in your life and why you want it. It's not just to turn around and say, I want to make an income from trading. That's not the most important thing, is it?
No, it's not, and it's what does it give you? And that's the thing is, I say to people, what do you want to trade? And they go, to make money. I go, that's bull. It's not about that. It's what money is, just a thing that sits in a bank account. It needs you need to transfer it to get something else. So why are you trading and why are you wanting to invest and why you want to make money is because of what you can get with that money.
Yep.
And so it's the lifestyle. It's whether it's your family putting your kids to private school, whether it's to buy a boat or golf every day of the week, whatever that is for you. But that's your why.
Yep.
And that's so important that in our beginners trading mentor course, that is the first lesson. What's your why? How to find your why, because unless you know why, then how and what's are completely irrelevant. And I find most people just go to what and they don't understand how or why. And so that's why so many people investing are inconsistent and they just don't do it very well.
And it's got to be about what you're passionate about. So, how your life's going to look when you already have it. And so someone said to me recently, that they know what their why is. And I said, well, have you written it down? And they said, no. And I said, well, then it's not real. It's not tangible. It's not there. You haven't set your intention. And this is what it's about, setting your intention so that you can actually work out really and clearly see what your steps are to actually get there. Otherwise, people just have a lot of information running around in their head and it's not set in stone. So that's number one.
And I find if you don't understand your why, you make all your decisions based on the past, not where you want to go. And really, if you want to be a successful trader, you need to make the decisions a successful trader will make now. So what decisions would Janine and I make on the market now? And if you're thinking that, then you're going to make the right decisions for you. So what's the next question?
All right. Are you waiting for me to press a button?
I am. I'm waiting for you to press the button.
Okay. Start small. How much money do I need to get started and how much am I happy to risk? That's really important. So starting small, people often think that they have to start with, because in your book, right, you've told people that they can take their capital, available capital, and divide it into 5 positions. That's like a starting point if they need to, but we more regularly say to people, make sure you have between 8 and 12, or you're aiming between 8 and 12, just from a risk point of view for each individual investment. So some people take that first comment literally and say, right, I've got a couple of 100,000, maybe they do, and they're just going to divide it up into 5. Now, these are people with no training or knowledge really past other than just reading a book, okay, and they're trying to do this. So what are the issues then that person's going to face when they start to buy stocks of positions that are that big?
Well, I mean, fear of making a mistake, fear of being wrong in their decision, and fear of losing. There's all that.
Yeah, but what mistakes will they make?
Look, they'll buy the wrong stocks, they'll make emotional decisions, they'll do all sorts of things. They'll put too much in some stocks or not enough in other stocks. They'll sell out too early, buy too early, sell too late.
Yep.
Can I keep going?
So
I can probably do 100 of them.
How does somebody think? Because some people come to us and they automatically say, look, I've got this amount of money, but I really am not confident in trading it myself. I want to trade with a small parcel of it to get started. So what is the good small parcel size look like for someone so that their psychology is not too greatly impacted by the market?
Look, I think as long as you've got $1,000, start doing it, but really, No,
but just say they've got 100,000, right, and they want to start a portfolio. How much of that 100,000 should they start with?
Whatever they're comfortable with, because that's the issue. It's like the start small to me is a lot of people don't start trading and don't start investing because they think they're trying to eat an elephant. It's too big for them. The concept of managing their money and doing it right is just incomprehensible to them because they're thinking they've got to be so knowledgeable and so wise to do that sort of stuff. So then they give it to somebody else to do, thinking, oh, well, they must know better than me. But investing and trading is simple if you know how, and it doesn't take Einstein to figure it out. But start small. And the answer to what you're saying is if I said to you, you got $100,000 and you want to put that in the stock market, but that scares the hell out of you, but 5,000 doesn't, then put 5,000 in.
Yeah.
You don't need to put the whole 100,000 in. Put the $5,000 in now and just get comfortable with that, and then maybe put another 5,000 in to get comfortable with that. So that's that starting small. It's like dipping your toe in the water. Get comfortable with your toes in the water, and then you move up to your ankles and your knees and your waist, and then next minute you're swimming around having a lot of fun. And that's the process of going from a novice to a full-time trader or somebody trading for money for income.
I told you he loves to have a chat. It's like he's sitting on the couch and you're on the other side and he's just having a chat.
Don't ask me questions.
All right, these are questions that you guys have to answer for yourselves, right? So be willing to fail is the next one.
Yes.
What are the biggest mistakes people make and how to avoid making them? Do you know that when you're actually thinking about trading the stock market? If you don't know the answers to those questions, then that's really where you need to start from.
If you're not willing to fail, then you're not willing to succeed.
Yeah.
It's because you can't succeed without failing.
Without making mistakes.
Yeah, you have to make mistakes. You have to fail at something when you're on the road.
Tell me, what's one of the biggest mistakes that you've seen traders make?
Not starting.
Right.
It's just not starting is one of the biggest ones. Number two is not getting educated or getting an education something they think is an education, which goes back to the ignorance you're talking about. Just watching YouTube videos is crap. It doesn't teach you how to trade. But people have this mistaken thing that they are getting it. But to me, the big thing is people getting into areas that they shouldn't be in, like high leverage stuff, like high volatile stocks that we see every week, that people with the least amount of knowledge are trading the ones with the highest amount of volatility and doing the buy and pray method, hoping they'll get it right.
I actually think one of the biggest mistakes people make is when they try to follow what other people are doing without having any training. To me, that's just crazy because it's like, if an athlete who knows exactly how things work, like the rowing, I watch some of the rowing, they understand the water, they understand the boat, they understand their body, all of those things that go into it, currents, the wind.
Trying to follow somebody else doing it, the professional is not work.
Can you imagine me getting into a rowboat and just trying to row the distance I wouldn't even last.
You'd go around in circles. All right.
All right. Be patient. What makes people impatient? What strategies can I use to stay on track?
Well, yeah, that's the one. It's a big one, isn't it? People are very impatient. They want instant results, but it's not about... To me, the money comes when you earn the right to get it.
But what makes people impatient? Is it the greed?
Yeah, it is, because...
So it's about recognising in themselves whether they feel that, and then it's about having an awareness. When you trade, you need to have a really strong awareness of yourself and be honest with yourself. And often other people will tell you things about yourself that you don't want to hear, so start listening is what I'm saying.
It's also part of, I think, there's a lot of people who call themselves traders and they think they've got to be in the market to be able to think of themselves as a trader, but the best traders sit back and wait and stalk the market. And there are times when I have zero money in the marketplace, and it could be months that I don't have any money in the market, and then I go in and trade because you get in on the safest time where the biggest gains are likely to happen and stay out of the market when the higher risk is there. But this is what people don't do. They're not patient enough to wait for the trade.
So what strategies can somebody use to stay on track? I mean, that's a question that they need to be able to ask themselves. And if they don't know the answer, then should they start trading if they don't know the answer to that question?
No. Okay, so how many? We got any more questions?
All right, so that's it.
Okay, so now we need to go now we know from our own research that when people start trading for a living, some would-be traders dive in, boots and all, using the no guts, no glory approach, and I've seen a lot of you doing that. This is mainly driven by FOMO, or the fear of missing out, and in this approach, they are risking way more than they should, as they focus on how much they can make, rather than properly consider the risks. Now, we all know what eventually happens to this group of people, don't we? Yep, you're nodding your head up and down. Okay, now a fact you may not know is that stockbrokers have shared with us over years, many, many years, how most traders stop trading in the first 12 months to 2 years because they've blown up their account or blown up most of their account. And with record levels of government spending and the stock market remaining buoyant, you can probably guess what will happen when the stock market eventually pulls back strongly. Yep, you guessed it again. they're probably going to lose. Why? Because a rising market gives people a false sense of confidence in what they're doing and their knowledge, so which sets them up for failure if they don't have some proper rules around them.
Another group takes a different approach, and these would-be traders are more cautious. Now, I have spoken to a number of women, Dale, who do this, but it's not just women, it's also men that make this mistake.
Yep.
Too. So they just dip their toe in the water when they trade. They jump in and quickly jump out to make maybe $100, maybe a few thousand if they get really lucky, and the market happens to move up strongly. But what are they really risking? Sadly, most don't actually know because they don't have a proper trading plan and have not learnt how to use a proper rule or to use proper rules to enter and exit with confidence. So this group is also ruled by their emotions, mainly fear. So how do you trade? That's the question you really need to ask yourself. How do you trade? Are you like the first group or the second group?
Are you talking about trading is like somebody who's buying, selling a lot, or just anybody who buys or sells?
Look, there's a big difference between somebody who actually maybe occasionally buy a stock once in a blue moon, maybe once a year or something like that, and someone who is more repeating their transactions in the marketplace.
Okay.
Yep.
All right. I just want to get some clarification on that. Now, to help you learn from the mistakes of others so you actually don't repeat them, it's really important you examine why people do what they do. Why are people fearful? The answer is really simple. They've not addressed the one thing that will prepare them to trade the market for a living, and it quite simply turns a fearful person into a confident one. And would you like to know what that is? And I'm sure that you're doing this. This means yes, that means no, this means you've got no idea what you're talking about. Okay, now you may have guessed it, right? It's knowledge, and that's what Janine and I talk about all of the time, but it's far more than that. The vital key is the application of the proper knowledge and the building of the necessary skills so that you ensure that you succeed. So if you are one of the two groups without proper knowledge, you fail before you even get started. Now, the reason why you have or will fail is that you have not made sure you have the answers to the most important questions. Now, how important is it to you that you develop a proper trading approach? Is it critical to your long-term success? And if something does go wrong, will you know how to correct it and turn your trading around? Do you have the ability to properly assess your risk, choose the right rules for the outcome you want? And these are all important questions you need to ask yourself. If you have the right knowledge and skills, you will already know the answers to these questions. Particularly, you will know the answer to how much you can make from your trading.
That's all food for thought. Think about that. In order for us to share with you how you can trade for a living from home, we have a few points or tips to help you get prepared to run your own portfolio to generate an income from trading. So let's have a look at that now.
Cool.
Right, on the screen there, there's some tips to prepare to trade from home. Now, you mentioned one of the most important ones or mistakes that people made was not having the knowledge. So that's obviously number one on our list, is to get the knowledge to be able to trade from home properly so that you don't end up on the wrong foot.
Ignorance is expensive, knowledge is not.
That's a good point. The next one is about the skills. Now, people think that once they've got some knowledge that they're actually automatically able to do something. It's not that way at all.
I can learn how to drive a car any day, but until I get behind the wheel,
now,
I'm pretty terrible at it.
Now, what was the PPPs that you remember, the 3 Ps?
Isn't it 4?
4 Ps?
Planning, prevention, and performance.
Something makes perfect. Practice makes perfect.
Oh, perfect practice makes perfect.
So it was 3 Ps.
It was.
You forgot
your own
statement.
I thought you meant about perfect planning prevents.
Yeah, I'm going to give you heaps after the show. For that one. All right, so skills.
Skills.
Yep.
Yes.
So it was all about getting the practice, and it's all about the correct approach.
We need the correct knowledge to develop the correct skills to get the correct outcome.
Yeah, and so how do you know if you're actually doing it properly? That's the point, isn't it?
Well, the market tells you, doesn't it?
Yeah, it does, but in the beginning you don't know that. Yeah.
No, because you don't know what you don't know.
Correctly, that's right.
Okay, so knowledge, skills.
Competence is another thing. So once you've got the knowledge and you're developing the skills, you're proving to yourself whether you have the competence to actually trade from home. Yeah, how does somebody know? I mean, if you trade for 6 months and you're able to make some money on the market, do you have the confidence?
No, not necessarily.
It gives you confidence.
Well, you could be just trading in a bull market where anybody can make money.
Yeah, well, that's true.
That could give you overconfidence.
So what you're saying is that competence is not proven in necessarily just in a rising market. It needs to be proven when the market pulls back as well.
Correct. You need to be able to trade in all markets.
So how long does somebody need to trade to prove to themselves that they can trade from home?
At least 3 years. 3 to 5 years in my book.
I would have said at least 18 months they'd need to trade because we'd get at least a pullback during that time so you can see how you can perform.
We haven't.
You're disagreeing with what I'm saying, but that's okay. We have a different opinion.
Let's move on then before I start getting on my boxing gloves.
Okay.
Competence.
Planning for expenses.
Okay, that's number 5.
That's really important. Yep. Okay, so we've talked about this before, and that is people often start to trade from home and they haven't got a big enough buffer of cash available to cover their expenses because you don't want to be stressed about whether you're going to be able to pay your bills when you're learning and building your skills and getting experience in the market.
You need 12 months of money in the bank account before you start doing this.
Great. Okay, so that's planning for the expenses. A place for trading at home.
Yep, you need your trading workspace.
You need your sanity. That's the reality. So you actually need to set up a space at home that is yours for trading.
Not it.
Yep, exactly, and that nobody can come and interrupt
Toilet's
you
definitely
when
not
you're
it.
doing your analysis and trading, although that might be the only escape for some people with families. If you have a lock on the door, that can be useful as well.
The man cave's pretty good, and what's the woman one?
The place for trading also is to have a hat. If you have young children, have a coloured hat. When you're wearing that hat, do not disturb. That's the message that you want to send, and train them as young as you possibly can. Okay, the right tools.
Yes.
That's really important, isn't it?
So many people send us things with charts that the tools they use are pretty ordinary.
Okay, so a lot of people start out in the market and they're using broker websites thinking that that's their tool. Absolute rubbish, isn't it?
Anything for free, it doesn't necessarily mean it's good.
Yep. So you need the software for one to do it. But more importantly, once you've got the knowledge, the tools are actually, the tools become your rules, really, aren't they? That's your best tool, having a proper set of rules and having all the documentation organised as part of your trading approach, because you will be trading as a business effectively. It becomes your business, and so you set it up that way. So the right tools, prepare your partner.
Yeah, that's a huge one.
I added that in
massive.
there. Oh, look, the number of partners that I've had the pleasure of speaking to over the years has been fun because there is the stress sometimes for individuals who are going through the course, and it's about performance. Then their partner puts pressure on them that they've got to perform. That is the worst thing that you can possibly do. If you want someone to fail at what they're doing, go and do that and put pressure on them to trade. And
I've had performance anxiety before.
So the right way is to support your partner, understand that there needs to be some money set aside after you've actually got the knowledge and used some money to actually educate yourself. You need to put some money aside so that you can trade the market, and that becomes the money that you use to develop your skills. Really important, and the partner needs to be behind that.
Are you telling me I talk a lot? Gee,
it's the one chance I actually get a word in here, and he's telling me to be quiet. Okay.
Is that it? You're okay? You finished now?
Yeah.
Can I keep going?
Yes.
Okay. Now, how many of you are prepared to trade? Now, I'm sure we left you with a lot to think about if your goal is to trade from a living, and it's okay. That's all from us now on trading from a living from home. Now, before we get into our next email, I hope you have your phone ready and been waiting and patiently waiting for the opportunity to call into the show to chat to Janine and I live. Now's your time to get dialing. The number you need to dial is 0392909988. That's 92909988. We'd love to chat with anybody that's out there watching us tonight, so please give us a call with your number. Now, while you call us, we'll get into answering our next email, so call now.
That's really exciting that we're getting some people
All right,
calling
the next
in.
email.
I just wanted to say I'm really excited to actually hear people's voices and that we get to chat to people.
We do. It's exciting.
so
I love chatting to
awesome.
people. It's nice hearing listening to you guys and interacting with you. Now, the next email we have is from Shiv, who says, "Hi guys, love your show. Extremely informative. Was hoping to get your views on Archer exploration and Inside Tech Pivot. Have a good day. Regards, Shiv." Let's go.
All right, Shiv. Now we're looking at Archer materials. So I've
Yeah,
got
we don't
that
do
one
two
right.
stocks, Shiv. We only do one.
Yeah, that's right. Now, look how far it's pulled back from that high. So this is another stock that's quite illiquid in terms of its volume that's trading on the market there. You can see down the bottom, and quite patchy. You'll see all these spikes in volume when the price rises. So it's really prone to, stocks like at this level can be manipulated a lot. We've seen a 46% decline from the high in this share. So that gives you an example of what Dale's talking about. People will get into these stocks, think that they're on a roll, and all of a sudden the next week their profit's been wiped out.
Wow. I mean, look at it. Yeah. So right now you're saying this is not that exciting.
I'm saying beware at the moment, definitely. It'd have to get back above about 185. maybe 190, and then it would start having the potential to go higher, but there's a real risk, isn't there, to the downside?
Yeah, look at it. It's not a lot of volume, is it? There's like not a lot of money going through this sort of stock, and it's really interesting why people continue to want to trade some of these stocks. I understand that they can, go from $1 to $2.
Well, they might be talked about on a broker's website. There's a lot of brokers talking about small cap stocks at the moment.
Yeah, but is that whole, like what I was talking about yesterday about what ASIC said, pump and dump. Copy trading is another one that you briefly mentioned as well. People just copying others and having algorithms just copy somebody else's trading and stuff like that. But brokers, what's their job? To get you to trade. So they're going to get you to trade whatever they think looks sexy, and then so they can get you to trade. It doesn't necessarily mean that you're going to make money out of it.
Okay, so what do you do with this one?
Well, what I would do with this one is he didn't say he's just asked us. He didn't say he was in it, did he?
No.
So we don't know whether you're in it, which really does help us to tell us whether you're in it or not. But right now, I wouldn't be looking to buy this stock at this point in time, even though it's fallen 46%, because I think it could probably go all the way down to about $1 or something.
Yep,
you want to add anything?
I agree.
Okay, we do have a caller now on the line. I think it's Manish from Sydney.
Yes.
Yeah, Manish, how are you doing, buddy?
I'm good. How are you?
Good. We're super fantastic here in Melbourne in lockdown, so there you go. But love to have you on the show. What's your question for us today?
All right, my question to you is on FMG.
Yeah?
And going by what's happened in the last few days, I just wanted to know what your thoughts on FMG, especially when I look at their dividend. It's paying 20% and above.
Yep.
That we cannot generally. It's very hard to find investments where you can get 20% return, although the price is falling. I just wanted your views on it. And thank you. I listen to your show every week.
Obviously you came in late tonight because we've already covered FMG a little bit earlier.
No, but we haven't covered the dividend.
Sorry.
But we didn't cover the dividend. That's okay, but that's a really good question, mate.
My view was more on not FMG in general. It was more about the 20% return. When I look at it, it looks very attractive.
This is a great
Fantastic,
question.
Manish. I'll get Janine to answer you.
Yeah, I'm just chafing at the bit to answer this question
shut
for
up
you,
then.
Manish. This is an awesome question because this is what happens all the time, isn't it? When stocks fall and people look at the fundamentals and the dividends all of a sudden just rise because the price is falling and then they think they're going to get paid that dividend. Do you think if FMG's share price is down, the next time they go to pay a dividend, they're going to pay that?
That's an historical figure.
No, I don't believe so. That's be unlikely, because it's a changing figure. It's in flux. So don't get fooled into buying a stock thinking that you're going to get that sort of dividend from the company. Your best opportunity when you're looking at a share is to wait until it actually bottoms and then starts moving back up again. It's a much lower risk time. And our message, as Dale said before, we don't ever buy stocks to try to get a dividend.
I mean, you might be, if you bought FMG today, you might be losing 20% of capital just to try and get a 20% dividend. And the reason I understand why people want a dividend.
Realistically, you're never going to get. I can't see them ever paying that.
No, I can't see them ever paying it either. But it's like I understand people go, it's going to pay this much dividend, and they have this feeling that it's a guaranteed income source where the growth is not.
Yeah.
And I understand the thinking behind that, but always go for growth. And right now, FMG's going down, so we need to stay with that. So, anything you want to add before we move on?
No, I think it was an awesome question.
All right, so you've got the next question then.
Okay, we have a question from Carlos. Hi, Janine and Dale. If you own Wes at a purchase price of around $54, would you consider exiting if the price closed below $56.30? I consider this scenario to be likely. However, I am after your opinion, please. Do you think this bearish move on Wesfarmers has strong momentum? Price acting inverse to the perceived positivity in reports baffles me. Regards, Carlos, or C, he said. We're also, is that all you wanted to?
No, we're also asked this, a question on Wesfarmers by somebody else, a lady called, I think it was somebody called Say. Yeah, they also asked on Wesfarmers as well.
Okay.
But the answer, can I say something first? The answer is no, just because the trade's too important. I'm not going to sell it just because the trade's to another dollar figure. You can go now.
I said no, and you still spoke.
I know, because I just got to get it in. Go.
All right. So we're looking at this stock. Okay, it has pulled back away at the moment, and what this person's talking about is that they've bought at a certain price, so $54, and would we sell if it goes back below $56.30? So at the moment, we'd have to have rules triggered. So that's the first thing. So
Correct.
if the rules that you have set for the exit on this stock triggers, then that would be a reason to sell it. But at the moment, I can't see that a rule has triggered as it today.
No, I can't see that anyway, but, I just want to... if people want to give us a call, 92909988, call us now and we'll answer you in a second. But from Wesfarmers' point of view, it looks like it's going down now. It's no reason to sell it at this point in time, is there?
Yeah, look at the big gap on that monthly chart if you look at the left-hand side. Now, how often does a stock gap on the monthly chart and not fill it? I know you hate talking about gaps, but how often does that happen?
How often does this happen? It doesn't.
Yeah, rare.
So it's rare for a stock like this
Especially
to
a
sort
big
of gap
stock.
down. Yeah, I mean, look at the fall over this 2 weeks, and we've seen that gap down. So look, I wouldn't be worried about Wesfarmers. I think it's got really good, strong support, but. 56.30. Where did that come from? Is that this high here? Is it 56.33?
I'm not sure.
Yeah. If it just came below those lows, there's no reason for me to sell that. It doesn't. It's not necessarily a rule. But
Depends if it closed down hard. Like if it actually closed down, then that might be a reason.
I think with Wesfarmers, it's better to use a technical sort of exit. It's a much, much more consistent rule for Wesfarmers anyway. Now, I think we've got to read the next question off the script, so do you want to do that?
All right.
So that's question number 7, I think, from Johnny. I think we've got a question.
All right, Johnny. Next question from Johnny. Hi, Janine, Dale and team. Great work on the show. I'm interested in buying some index funds that, I know you're going to love this one, it's probably just as well that I got your question, that track the Australian, United States, international and global markets, as well as some specific sector ETFs. There are so many to choose from and many index funds that track the same markets, but I'm confused with which one to pick. Oh, look, I'm glad you are, because so is everybody else. I know that you guys are not fans of index funds. However, I'm interested to hear which ones that you'd recommend. Also, should I take dividends and management fees into consideration?
Well, index funds I'd recommend, 0. That's easy. Next question.
Okay, so what sector ETFs?
Look, if it depends on your goal of your portfolio. If you just want to sort of buy something and forget about it, then buy any index funds because they're all going to be good. Like they're all good. iShares or what's Beta shares?
Vanguard. Shares.
They're all
the
pretty
Aussie
good.
one.
You just look at the fine print and look at that. But it's like they're all Me Too products. So it's not really much difference which one you go with. You just go with one that you want to go with. So, but if you're looking at overseas, the US market, just again, stay with some of those big players in the marketplace for their ETFs. But
Would
what
you go
I'd be looking
like
at
sector-specific areas, like banking can be sometimes a good area to go into when the financial stocks are going up, and things like the technology-driven areas can be quite good. Mining,
to me, ETFs
resources.
has got to be specialist areas. Like maybe even rare earths or something like robotics or all that sort of stuff, or blockchain technology type ETF. If you want to do an index ETF, you're far better. I guarantee you're far better just buying the top 10 stocks in the Australian market and going to sleep and coming back in 10 years' time. You'll make more money from buying the stocks than you will have an ETF. But that's just
and
my
not only
opinion.
that, that's the other side to what we've talked about, is that what we're seeing with this flood of money going into ETFs, where's our market going to end up? Because it's going to put the control of all these companies into the hands of few, isn't it?
Yeah. Anyway, we've got a caller now. We've got a caller on the line, Jen. Jen from Tasmania. How are you today?
I'm good, thank you. How are you?
We're fantastic, and thank you for calling into the show. It's good to have you on the show. Now, you do have a question for us?
Yes, I do. Yes. I currently hold 2 stocks, which are Province Resources, PRL.
PRL, is that P for Peter?
Yes.
Okay,
yes.
PRL, yes.
Yes, and Crystal Pharma, CPH.
Okay, so we'll look at the first one for you, PRL. Do you own those stocks at the moment?
Yes, I do.
You do. What sort of outlook is it? Short-term, medium-term, long-term?
Well, I'm looking to own them for a few months, but I'll see how they go. If they're performing better than expected, then I might consider holding long-term. Longer.
Okay, so what kind of research did you do on them? Did you do mainly fundamentals, or what did you do?
Fundamental. I read about them. I like them, but I think I bought them at the higher price than I should have.
Okay, so does that mean you didn't do your research that well?
Well, yes, probably not.
Now, hang on a minute.
I'm not
that's a
trying to
bit
be rude.
rough.
I'm just saying I'm
Let's
asking
get
questions.
into the chart.
All right. Thanks, Jen.
Come on,
Janine's
Jen.
going to give you an answer now.
All right, so we're looking at the chart of Province Resources. So that was the first one. Now, I wonder if this has been a backdoor listing somewhere. Have a look at the chart. It looks really odd, doesn't it? The
Yeah, it
fact that
does.
it's done this. So we're now seeing this stock moving off a bottom. So it's actually had a splendid rise off that low, and it's just consolidating a bit. So, I'd be thinking that if it gets above 18 cents, this stock's going to take off again. That's what I'd be looking at. The concern, though, is if it falls below around 12, 13 cents under these lows here, we could see it drift all the way back down. And that's a problem for some of these low liquidity type shares. You just end up on a roller coaster ride, don't you?
Yeah, you do. And that's where you get into that state of confusion about, well, what do I do? Do I hang on? Do I get out?
Got to have a
How
stop
long am I
loss
going to
on
hang
these.
on to? And it's a real guessing game, and that really messes with your head, doesn't it?
It does.
It really messes with your head. So, I'd be suggesting, Jen, you trade better stocks than this because it's a lot more consistency. And maybe not as exciting, but then you won't have the stress on that sort of stuff. But again, Janine's giving you some price levels of where she thinks, if it goes one way, then it might be okay. But if it goes the other way, get out of
Jen,
it.
I had a look at the other one as well, just quickly while Dale was talking.
Oh, you snuck it in.
But I'll just say, ring next week to talk about that one, because it's really interesting the way that it's unfolded recently.
Okay, you heard it from Janine. Give us a call next week on that one, Jen. So now it's your question.
All right, we have a question, and this one is from Human. Hi, Dale and Janine. I always watch your shows and have been learning a lot from you. You previously mentioned about BHP Billiton and Woodside merging, and I recall you said something about it is good to know which companies BHP Billiton is likely to buy. Would you please elaborate more on that? Is it a good idea to buy shares from companies BHP Billiton is likely to buy, as those shares would rise after being owned by BHP Billiton? Thank you for your advice. Kind regards, Human. Now, that's a really good question to answer.
It's a question, but it's impossible to answer.
It's good that somebody is following the detail of what we're talking about.
It is. I think it's a great question.
Yeah, but how do you follow that? I mean, BHP, what sort of companies would they be buying? I mean, look at the statements. I would just go and read the statements that the CEO has made recently. It's really important because they're looking for metals, right, that are going to be important for the future. So things like the rare earths
and metals
is really important. I would also go and have a look at it's the clean technology that they're getting into.
But there's so many different companies out there. You might be thinking, they might buy this one, but they'll buy another one.
Yeah,
so
but I guess I would
look. It's not a possible answer.
But it's not a clear-cut answer, but it doesn't really matter whether it's BHP or some other company taking them over. I guess I would go out and look at all of the charts for the rare earths and just scan through them and see what opportunities there are if you have the technical analysis knowledge.
All right, so that's it for BHP. Now, Janine, it's your turn.
Thank you. If you called the show and you missed out on this, talking to us this week, we missed out too, as we would have enjoyed the chance to speak with more of you. Just make sure that you write your question down to remember it and be back here watching the show next week, as you'll get another opportunity to call in when we give you the cue. So Dale will ring his bell.
Ding, ding.
Remember, the best way to have your question answered is to call in between 7 to 8 p.m. every Tuesday. Otherwise, email your question right now to info@wealthwithin.com.au, and remember to include Wealth Within in the subject line.
You know how many people don't do that?
Really?
Not one this week put Wealth Within live in the subject line. I don't know, you keep asking, don't you? Anyway, remember, in order to show your appreciation for us helping you by answering your questions and educating you, all we're asking is that you subscribe to our channel first and then send an email in to us.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented, but also received great value from our answers to your questions.
Remember to put the show into your calendar and join us right here live on the Australian Stock Market Show every Tuesday, 7 to 8 p.m.
As always, thank you for joining us, and we hope you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.